Here's the midday update for January 7th, 2013 on the Dow 30-day 1 minute chart. What I'm worried about right now is that this drop will turn into a corrective 2, and a corrective 2 that would typically trace to 0.618, and that'd be around 13,125 at worst. So I'm kind of staying on the sidelines right now because I think there's a possibility this thing could really drop. Because mostly because of this reason right here, the VIX. This is one reason. Just look at this, from 23 to 13.5. That's just incredibly. That's amazing. In a bad way, it's really bad because you have no volatility whatsoever, just complete complacency right now. So in order for this VIX to rise back up to like around 17, there would have to be a corrective 2 of the size that I mentioned. So you don't want volatility this low because whenever this level hits, it's typically there's a top not a long term, well, top well. Well, you know what I'm talking about. This just, you don't want the VIX this low ever because it's just there's too much complacency, and this is the number. 13.5 is the magic number basically, and you want to stay away from the market until the VIX like retraces back to like 17ish. It's just way too complacent right now. Another reason why I'm avoiding this market right now is because of this Apple. Apple completely broke down like from here to here. From 553 to 515 is pretty bad, and this looks like an upward corrective zigzag instead of a impulse. Because it's not an impulse, Apple's chart just broke down completely. I know it bounced back from the lows, but this chart is just not right. But I would like it like at 465, 475, or maybe I'll wait till earnings to come out before I would decide to buy it again. Because earnings could just be like could tell us exactly why the Apple stock has been dropping so much. So if there's no problems at all and it's just a stupid thing, then Apple could rocket back to 700 plus. But if it's bad, you never know. Anyway, rest in peace. Again, if this is the start of a 2, the lowest I can see this to go is around 1425 to retrace the entire gap up. That'd actually fill the gap. I hate talking about filled gaps, but yeah, that would fill the gap if it dropped all the way down to like 1425. And that's where 0.618 support. And for NASDAQ, yeah, and I typically don't talk about gap fills, but this one, if this is a wave 2, it would fill. So, I mean, if this is just a shallow 2, that's fine, but I'm worried about this thing turning into a really deep 2. So if it rallies back to the highs and the Nasdaq rallies back to the highs, I'll set up a third wave. So I would either wait for it to drop to test 0.618 and or break a new 52-week high or new 10-day high to set up a third wave. Because the Dow is like retracing pretty deep right now, and if it retraces back, actually, when you look at the chart, it doesn't look that bad, but the potential for a bigger drop is there. But if it tests the previous 4 and rallies back over 13,440, I might consider going back in, but for right now, I'm kind of worried because the VIX is just obnoxiously low. It's obnoxious to look at this chart. That's a wrap.